Welcome to Explain the Charts, where we analyze the news and chart data to understand the market's direction. Today, November 13th, 2024, we're looking at SPY, the S&P 500 index, a crucial indicator of the U.S. stock market's health. Let's first discuss the current market events. Recent headlines suggest concerns about rising inflation and interest rates, which have been weighing on the stock market. The Federal Reserve is expected to release its October CPI report soon, and this will likely be a key factor driving SPY's price movement. Investors are worried that a higher-than-expected inflation reading could lead to a more hawkish stance by the Fed, possibly delaying or even preventing rate cuts. This could dampen the recent post-election rally we've seen in SPY. However, there are also bullish signals in the market. The recent surge in Bitcoin has boosted investor sentiment, and many are hopeful that the stock market will continue its upward trajectory. The election results have also sparked positive economic expectations for certain sectors, particularly those related to President Trump's presidency, like small-cap stocks and Tesla. This could lead to a strong performance for SPY, although the concerns about inflation and interest rates remain a significant challenge. Let's turn our attention to the charts and see what they tell us about SPY's potential future direction. The first chart we'll look at is the daily chart, which provides a longer-term perspective of SPY's price action. Looking at the daily chart, we see that SPY has been in a strong uptrend in recent weeks. The price has broken through several resistance levels, indicating a healthy bullish momentum. However, we also notice that SPY has recently encountered some resistance around the 6,000 level. This level could act as a barrier to further upward movement, and if SPY fails to break through it, we might see a short-term correction. It's crucial to watch how SPY reacts at this key resistance level. Now, let's zoom in on the 1-hour chart to gain a more granular understanding of SPY's recent price movement. The 1-hour chart shows a clear uptrend in SPY, with the price making consistent higher highs and higher lows. However, we notice a recent pullback, which coincides with the rise in Treasury yields and the concerns about inflation. This pullback is concerning, but it's not necessarily bearish. SPY is still trading above its 100-hour moving average, which is a key support level. If the price breaks below this support level, it would suggest a stronger bearish signal. It's also important to note the volume on the 1-hour chart. Volume has been declining in recent hours, which is a sign of diminishing bullish momentum. This could indicate that the recent pullback is gaining traction and that SPY might be heading for a short-term correction. We need to observe the price action and volume in the coming hours to determine if the pullback is just a temporary dip or a sign of a more significant reversal. Finally, let's look at the 15-minute chart, which offers the most detailed view of SPY's price action. The 15-minute chart shows a volatile market, with the price fluctuating up and down in a tight range. We see a clear pattern of resistance at the 6,000 level, which has been consistently preventing SPY from making higher highs. The price has bounced off this resistance level several times in the past hour, suggesting a strong level of selling pressure. This resistance level is likely linked to the concerns about inflation and interest rates, which have been weighing on the stock market. The 15-minute chart also shows a pattern of support around the 5,980 level. This level has been acting as a floor for SPY's price action, preventing it from making lower lows. It's crucial to watch the price action at these key support and resistance levels, as they will likely determine SPY's short-term direction. If SPY breaks above the 6,000 resistance level, it could signal a breakout and lead to a significant upward move. However, if SPY breaks below the 5,980 support level, it could indicate a breakdown and lead to a more significant downward move. The price action in the next few minutes will be critical in determining which scenario unfolds. To summarize our analysis of SPY, we've identified several key price levels to watch. The 6,000 level is a significant resistance level, and if SPY breaks through it, it could signal a bullish breakout. However, if SPY fails to break through this resistance level, we could see a short-term correction. The 5,980 level is a key support level, and if SPY breaks below it, it could indicate a bearish breakdown. It's also important to pay attention to the volume on the charts. Volume has been declining in recent hours, which is a sign of diminishing bullish momentum. This could suggest that the recent pullback in SPY is gaining traction and that a short-term correction might be on the horizon. The upcoming CPI report will likely be a significant catalyst for SPY's price movement. If the report shows a higher-than-expected inflation reading, it could lead to a more hawkish stance by the Fed, potentially delaying or even preventing rate cuts. This could dampen the recent post-election rally in SPY. However, if the CPI report is more favorable, it could boost investor sentiment and lead to a continuation of the uptrend in SPY. In conclusion, SPY is facing a crossroads. The potential impact of inflation and interest rates, coupled with the recent market volatility, creates a challenging environment for traders. It's crucial to stay informed about the latest news and economic data and watch the price action and volume on the charts closely to make informed trading decisions. Remember, our analysis is unbiased and should not be taken as financial advice.